Hey, listeners. Today I got together with Mert and Dan Smith for a news roundup. We had a little tariffs talk, of course, but this episode gets into much more than that, including the technical improvements coming up for Solana, Solana's next narrative, whether stablecoins need their own blockchain, and how a lot of Ethereum DEX volume comes from private order flow now. Mert, Dan, and I will also all be at Permissionless, which is coming up in June in Brooklyn, New York. Tickets are available now, so go grab yours to not miss out on crypto's #1 conference for builders. Okay, let's get into it. Hello and welcome back to another episode of Lightspeed. I'm Jack Kubanek, joined today by Mert and Dan Smith. We're going to do a quick roundup, talk about what was a crazy week in crypto markets, equities markets, bond markets, all markets, and hopefully get into some non-market, just Solana-y stuff as well. Mert, Dan, good to be with you guys today.
Always a pleasure. Likewise.
Mert, you did quite a bit of markets tweeting this week. Do you have like just a take to kick us off on just sort of the whipsaw, huge market sell-off, then return, then I guess this morning another sell-off once again as the sort of tariff situation with the Trump administration evolved?
Sure. Yeah, I did a lot of shit posts around this. It was fun. And in a way, crypto is already like this. So crypto already functions this way, which is why I found it so easy to shitpost about it. And I made a tweet that went way more viral than I would have figured. I think it got 98,000 likes and 3 million views at this point. And it was roughly just, so basically there was news from some guy tweeted that Trump is going to put tariffs on China, but then put a 90-day pause on everybody else. That news, I guess now we know it was actually early, but at that time people thought it was real. And so the market added something around 2.5 trillion in just that tweet, just from that tweet. Or maybe they already knew, so now there's another dimension to this of insider trading, which is also very crypto. And then somebody's like on CNBC, like, actually, we have no idea where this came from. And maybe they broke an embargo or something. And then that made it even worse. And then everything just dumped right again, which is exactly like a meme coin. Like the dev just rugged, except the dev would be the entire world markets, or maybe less to the US government or CNBC. And so basically I said, well, then roughly speaking, this is meme coins with suits. That's what finance is. And yeah, that's like a pretty good description, I think, of the past 2 weeks anyways. Now it turns out that news is correct to some extent, where Donald tweeted that China is not respecting the world markets, and he's going to put more tariffs. I think, what is it, like 104% or something wild? And the markets went up again. I think they went up like 4 trillion this time after that news. So that's what's happened. And within crypto, it's weird because I think the crypto assets went down and up in less extreme multipliers than their counterparts like Tesla, for example. So I'm not sure exactly what to make of all this, other than it's fun to comment on because it's just like crypto. Things just happen in like 1 hour time news cycles, and the news cycles comes from Twitter. And it's like play money, and people are just having emotional breakdowns and saying, oh, I hate Trump. But then now today they're like, this is a masterful gambit, my sire, my liege. And so it's exactly like crypto to me. And anyway, so that's what happened. In terms of, we can go into why the tariffs happen, although I kind of guess people probably don't care about our take on that. But in terms of, crypto specifically, two things are for certain. One is that it's clearly still extremely coupled to everything that it seeks to replace, which is the original thesis. And that's probably going to be like that for many, many years. Probably what I can see happening roughly is like Bitcoin maybe gets meaningful differentiation such that it's a bit more like gold. But then probably Ethereum and Solana never get there. I think they just, in a sense, get viewed as tech stocks, and they just do what tech stocks do. And then that's why we also now start looking at things like revenue. which just has not happened in the past. And the other thing is like, I don't know. I mean, for me, I was just happy that it's a great buying opportunity because like it's pure. What did Trump called them? A new party of panicans, fake and stupid, panicky people. He actually used those words. And I was not on the panicking camp. I think in crypto, you've seen much worse, and it's generally always self-inflicted. Like one of the exchanges just blows themselves out and then causes contagion and just blows everybody else out. Versus this was more like the economy is just tanking in general. And so I think crypto is in the best spot it's been in, especially if you have some risk tolerance.
We live on the dumbest timeline right now, and honestly, I wouldn't trade it for the world. Like Trump tweeted, something to the effect of "Now is a good time to buy," and then an hour later makes the phone call and fixes the tariff problem. I'm like, I don't know,
businessman doing business.
Yeah, exactly that. Mert, you've had a couple really truly viral tweets over. Like, didn't you have one about coffee that did something like an insane number of views not that long ago?
Oh yeah, that one got over like 100,000. I think that one was like something like quitting coffee is a scam. Yeah, I don't know.
Been off caffeine for over 2 weeks now. Have noticed 0 positive benefits. Fascinating. 12 million views. So you're a real influencer. Interesting. It's not just Solana.
There's a limited upside for Solana posting, but Mert, you've broken out a couple times to like the bigger TAM.
Yeah, I went viral on like some country tweets where I like just troll other countries. And, people don't know this, but when I had like 50 followers, that was my first viral tweet. I wasn't even on Solana. And it was just like, it was Morgan Housel, the author of Psychology of Money. And he said, "What is nobody talking about?" And this was 2020 or something. And I replied, how 70 to 80-year-olds are considered unemployable due to skill mismatch and mental decline, yet they exclusively run the country. And that went super viral. In fact, that went on like Reddit front page and like 100,000 likes and all this shit. And I was like, Jesus Christ, I'm getting zero money for this because back then there was no revenue payouts on X. But yeah, anyway.
That's good lore. I would add in the Blockworks network, if I could chill, Jonah and Avi from 1000X did a emergency pod with Felix from Forward Guidance on like the Trump tariff situation. That was fantastic. I listened to it and I think they kind of hit the nail on the head early as far as how things would play out. One interesting point that might be relevant to this show that came out of that was, do you guys think that there are significant tailwinds to send Solana higher from here? You try to think of what might be next narrative-wise. There's ETF approval, which seems imminent. There's some like legislation in the US, market structure bills, stablecoin bill, Firedance are going live. Is all that stuff going to matter significantly for price or narrative?
Well, yeah, it's going to matter for narrative. I don't know about price, but roughly speaking, there's a few angles. One is the regulatory institutional policy angle, right? There's a lot of institutions. I mean, I was just in New York and talked to a lot of institutions, and they were considering Solana for the first time. And the questions were never around like, do I invest in Solana? It's like, how should I use Solana? What should I do with it? How does it stack against Ethereum? And so, because, even in a year ago, the conversation would be Bitcoin, Ethereum, and then usually nothing else. Now it's like Bitcoin is its own thing, which is maybe something like digital gold, which even, Scott Besson said. And then now you have like the two leading the charge in terms of Ethereum, which is usually via Base or Solana. And so it's in the conversation. And we have a lot of institutional outreach things going on where I think we can safely conclude or assume that, Helios, Solana Foundation, Jito, et cetera, who just made another pretty large hire, we're going all out on those in those deals. But then also they're handling it from a policy side. I'm sure you guys saw the Solana Policy Institute, who's headed by like literally the best people in crypto that could possibly head those things. And that's one side of it. So like we'll be known, we'll have better clarity, and we'll be on the table, at the table for when these things happen. But then fundamentally, Solana is always a network of products and engineering. And this is, in my view, the biggest year for that we've seen. The second biggest would have been when local fee markets, Segway, QoS, and there's one other thing that went live right after the outage crises, and that's when FTX happened. But then I was super confident that it would recover after those 3 updates. But this year is way bigger, because this year we have FireDancer. We have doubling block space, which, by the way, like doubling block space is a lot of block space because it already does more TPS and everything combined. Doubling that. New consensus, by the way, new consensus algorithm, completely changing how consensus on Solana works, meaning like they're going to get rid of vote transactions, for example. Finality is going to be faster. Block time is going to be faster. And it really sets up the stage for multiple concurrent proposers. And that's excluding all the ecosystem teams and what they're doing. So like Helios is doing something called RPC 2.0, where we completely decouple the read layer from the write layer. And like Solana's read layer has been a long fan favorite on Twitter to shit on. Jito and order flow games, I think those are about to change pretty drastically as well. Confidential transfers that just went live. This is roughly the most tech changes and improvements that I've seen to the network, probably more than like the past years combined in terms of impact. So the narrative will be there. And, that'll lead up into, Accelerate is May 19th, 26th. So that'll be like a big event. It's basically mini Breakpoint, but it's in the US. And then you get into conference season, heading up into Breakpoint. And then, I think that's, especially if like markets stop getting decapitated by Trump even a little bit, then I think like this is the opportunity. I think this is the time when we'll have the most momentum.
Yeah, there's pretty clear catalysts as Mert laid out. And then I think one thing I didn't go mention was 00 coming hitting mainnet. I believe their schedule is to be live this year. I think they're validator sales right now and their testnet's already running. And then, the bigger blocks thing I think is fascinating. The proposal for 60 million, which is about, like a 20% increase, is on testnet right now as of 3 days ago in the 2.27 release. And so we're seeing that come to life. And this is moving pretty quickly, I would say as well, right? It wasn't maybe 3-4 months ago when that initial very small change from 48 to 50 million CUs kind of like officially made a PR and has been discussed. And now we're already seeing up to 60 pushing live through testnet, which is literally seeing this in real time. So everyone talks about FireDancer, but I think the most interesting piece of FireDancer right now has been how it has catalyzed the pace at which Onza is shipping and moving. Maybe it's just more obvious because then I started paying attention to it. I'm sure they would tell you they've been doing this for the last 4 years now, but it's very awesome to see. Like Alessandro on Twitter does a great job of like sharing these wins. I understand 20% maybe of what he says, but you can see the growth and speed at which they're moving. And to the point about doubling block space by year end, that was in the Onza 2025 blog post. And I asked him about it on Twitter the other day. He was like, yeah, if it doesn't happen before that, there's going to be problems. So you can just see the pace at which the teams are wanting to moving. And they had the whole North Star thing. I can't even stand that word because of the 6-month window of this industry arguing about North Stars. But Solana planted the flag around IBRL, and they're achieving both of those things in real time. And it's pretty hard not to get excited about that mission. And that's just the importance of having a flag post or a goal post to rally around, right? You have all these people moving in the same direction around a shared mission, and people move faster. So that, I'm not trying to rehash that whole debate, but that is the advantage of a single unified mission, is having people row the boat in the same direction, whether that's at a small startup, a large company, or a decentralized network of individuals. It's all the same thing when it comes to planting the flag and having people row the boat in the same direction.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem.
I mean, there's just a bunch there. Like I just remembered Alessandro also fixed Turbine, which was like relatively broken, which is like the most important part of Solana. The scheduler doesn't work in like many different cases. The fee APIs, which we're going to replace, are subpar. And then there's like the community side of this where we're seeing more super teams spin up, and super team is arguably like Solana's, I don't want to say the biggest moat, but it's probably up there. Like these bottoms up global little hubs of community that then churn out founders and startups. And then, we have that. We have the new, Coliseum hackathon, which has led to a lot of crazy teams in the past, like Jito, Squads, etc. They brought on Nikita Beer as an advisor, who's like Silicon Valley legend and consumer, right? Like these are all big moves, and I think those will actually speed up going forward.
Yeah, those are all good points. I think two things that I don't think are going to end up mattering a whole ton, at least in short-term narrative formation, is A, legislation, and B, Solana ETFs. Legislation, it just, those types of things matter in the long run, and matter if you're building a crypto business in the US and you want to make sure that you have a clear understanding of what you can and can't do and so forth. But like, I don't know, I think a lot of the excitement around legislation, at least in crypto markets, was that like the US government was going to be market buying Bitcoin or something like this. And now that that hasn't happened, I think that a lot of that stuff, while it is important work that needs to be done, I don't really foresee that being a big deal. I think that, to your point, culture, tech improvements, just Solana being the fastest, most performant blockchain, all that stuff is going to matter narrative wise. I don't foresee some of the more regulatory capture, if you will, stuff working out for Solana, the asset.
Talking about ETFs, there's also the interesting part of, Bitcoin. I don't want to say and I'd be curious what people contribute Michael Saylor to this portion of the pie, but like, there's a large percent of why Bitcoin's a narrative due to him and MicroStrategy in some regard. And Solana, I'm not sure. They clearly agree because there's like 6 or 7 of those coming out on Solana. We'll see how they, fare up. But that does seem to be the next big asset that they're looking for. But it's not necessarily the dentist's assets. Where it's kind of hard to explain to your dentist when you're getting your teeth cleaned, hey, what is Solana? Oh, it's super fast, parallelized SVM infrastructure. Whereas Bitcoin, like, oh, it's digital gold, right? Like, so we don't really have that boomer messaging.
Mert, you also mentioned Michael Saylor, which is something I wanted to get into on this pod. Something that is an increasing trend we're seeing is that people basically want to copy the MicroStrategy / now strategy, which I hate that rebrand, by the way. It makes life so much more difficult. MicroStrategy was iconic. Strategy is just a generic word. Bad SEO. Anyways, Michael Saylor will say his strategy of basically using a company that once did something else and just converting the whole business into using the treasury to acquire crypto is something we're seeing copied on Solana. And there was a new version of this week when some ex-Kraken employees acquired a majority stake in Janover, which is a real estate company that is traded on the NASDAQ, and basically announced that they're turning it into a crypto treasury play, starting with Solana. They're just going to be acquiring SOL, acquiring Solana validator operators. And then the stock ripped over 800%, which was weird to me. Like it feels like if you get a public listing as a it's small. It's a micro cap meme coin essentially. And I think the stock hasn't kept the price since then. But nevertheless,
49 million. Just
yeah. it's crazy to me you can do this in like the public market of just overnight fundamentally change the very nature of a company and still maintain the public listing. It's kind of a smart move, I guess. They're planning a rebrand to something like DeFi Development Corp. So it won't be called Janover anymore, but I believe it'll still retain that public listing status. They also raised like 42 million in convertible notes from Pantera and Kraken. I don't know. We already have an example of this with Soul Strategies, which is headed up by Leah Wald, ex-CEO of Valkyrie. We've had her on the pod a couple times. But now there's not one, but two MicroStrategies on Solana. And, maybe it's hard to redo the Michael Saylor thing again. So what do you guys make of this new trend of sort of taking companies and converting them to Solana treasury plays?
I have some thoughts around this. One, I think it's kind of silly from a high level. Like, it doesn't really get me excited, doesn't really get me interested. And I agree with your takes around the Sol ETF from like a catalyst perspective. It's really good from a like stamp of approval brand perception play. I think this is kind of in the same bucket as like getting big name RWA issuers to deposit assets on your chain. Right now, they'll still have a ton of velocity, but they're important from like a, hey, we are an institutional ecosystem, and that is important. And I think the ETFs kind of push in that direction. But two is with this exact thing, I think this ties into Mert's dentist comment, right? Talk about a platform for this digital infrastructure to build things on top of it lacks like tangibility. But when you start putting businesses around that, it looks and feels a lot more like a stock. And that's what TradFi knows and is comfortable with. And so they're almost like these stock-like wrappers around the asset that give you exposure to the underlying. To me, that's like an insanely roundabout way to get there. But if that seems to be like what this crowd is interested in, and I think that's why you've seen so many of these come online. It's not just Solana, it's not just Bitcoin, Ethereum, and basically every other large L1 in the, let's say, top 10 rankings by market cap. It has these coming online. So I don't know. It seems really wonky to me, but I think the thesis is that it's just like a more comfortable leap for TradFi to make. And then, yeah, like I also think the ETF still will take time. Maybe less so for Solana. That one kind of seems like it's in the chamber, but for these other assets that are, large market cap, actually building real things, continue to get investment. Those will still take a longer to come online. And again, you get this like stock-like wrapper that any large institution can purchase through their brokerage account with no changes. It is a stock. There's no token requirement or anything they need to shove through compliance. They're just buying another asset that they already would. So I think it's mostly that. I guess my TLDR here is this is like feels like a window in time type thing for everything except MicroStrategy. That seems more of like a bigger piece of the puzzle. Honestly, I guess the thing I would add is it's a bit of a special snowflake, similar to how Bitcoin itself is largely a special snowflake.
I don't quite get it too much. I think there's some sort of like a structural play on like lending and like being able to basically kind of lever up, but not really, such that, like you would get more Bitcoin than if you had invested through MicroStrategy than just directly Bitcoin due to, what he does with the convertible debts, but also like the multiplier. But like, it's just a fundamentally different asset. Like Bitcoin is just way different than Solana, which is, again, it would be like comparing gold to a Tesla, in my view. Obviously not exactly like that, but maybe it's similar or less wrong than thinking that Bitcoin also would, or Solana would also trade like Bitcoin. And one of the other problems I see with this is that, there's two or maybe three, but I think there's going to be like 5 or 6. And so it starts getting very dilutive and like, because it's a capital game fundamentally. Like whoever raises the most capital on this roughly gets the best, let's say, insurance policy for the holders or, the equity holders. And so you also need like a Saylor-like figure in a sense on Solana. And like, who's going to do that? right? Like who Sailor is Sailor. Everybody knows him. On Ethereum, you could, I don't even know who you could get on Ethereum, to be honest. If you were to do sort of Ethereum, I actually have no idea. Maybe Joe Lubin, something like this. But like on Solana, who are you going to get? Right. So I don't know.
Let me ask you guys about one piece of this, though, which is that Solana doesn't quite have a narrative that's understandable to just your average guy on the street, because I think there's one asset that is universally beloved by Uber drivers that kind of flies in the face of this, which is Ripple, which this morning I was looking, and XRP's market cap is currently 2x, like almost exactly 2x Solana's, which is kind of wild. And its whole raison d'etre is to be like the new Swift on the blockchain, which if you ask anyone what exactly that means, they don't really know. So I think there's also benefit in having a kind of opaque use case. So does Solana have a hard to understand narrative problem, or is it just new and like doesn't have the age that Ripple or Bitcoin has?
I wouldn't limit that to Solana. I think that's like literally any platform style chain, right? Like there's a new expansion podcast with Mike and AJ Warner that talks about, how Arbitrum thinks about itself, or how AJ Warner's view of Arbitrum how they should think of itself. And they just put out a new vision doc talking about exactly this concept. TLDR, it's not just like some straightforward thing that everybody today is really comfortable with. And I think that's true for like any L1 chain today. You're building out this like base layer infrastructure for other businesses and applications to come build on top of, and you offer these unique properties like some level of decentralization and censorship resistance. And that's net new. And so I wouldn't say it's like a Solana only problem. Like, I don't know, like Ethereum actually has this problem. Is it trying to be money? Is it trying to be this platform play? Or, I don't know, Avalanche, specifically looking at the seed chain, like what is that supposed to be? Is it supposed to play a role in this broader ecosystem? Is it supposed to be this economic hub, or the Cosmos hub specifically? Like what is that? What is its role? How does it sell itself? What is its narrative? Celestia, like literally every chain is kind of trying to figure this out. And I think it's a pretty normal growing pain of a net new industry, and a bunch of the businesses and protocols being built that are only a couple years old. So yeah, that's kind of my view. I wouldn't zoom in specifically on Solana as having this problem, and rather that just being a reality of the industry.
I think it's also just, I think there's some merit to the age thing, where Ripple's been around. Ripple, flipped Bitcoin back in the day, and definitely Ethereum, but for like maybe a few seconds or some shit like crazy. So there's like that age, and then, the token mechanics of Ripple are a little weird, I think, when you compare it to like an Ethereum or Solana. And, you also have to ask how much of the supply that the Ripple Foundation holds, and can hence, maybe help a bit more. But I don't think it's a narrative problem. Like, even when I was talking to the institutions in New York, they all understand, okay, so this is like crypto that's fast and cheap. Like they just understand what that means. With Ripple, it's unclear. I think it seems to be more like top-down deals, where like they have a team of like, I don't know how many people, but like 80% of those people are just full-time shillers, but like Zoom shillers, as in they shill to companies, and then maybe some TikTok people. Whereas Solana is like the other way around, where it's like 80% engineering, and the shilling is done by the communities to an extent. So really, it just means I gotta tweet more, I think.
The thing that might really make me have to change my priors, though, is that Ripple acquired Hidden Road for $1.25 billion this week, which is more than Stripe paid for Bridge. And Hidden Road is like a real prime brokerage with real customers. So like maybe there is something there. I don't know. That kind of blew my mind.
This kind of ties into what Mert said about the foundation. It's like, what can execute better? Aligned business that can operate in the real world, or like, fully decentralizing and not having that foundation. I think there's just two different routes. I'm not trying to like defend or push back on Ripple here. It's just like an interesting observation. Like who executed better over the last 2 years, let's say Ripple and their like foundation and team led efforts, or like Arbitrum DAO, which was fully decentralized, pushed everything off to the token holders. And now again, this new vision thing, they're pulling a lot of that back in, and I think they're making the right decisions. But it's just interesting to kind of reason about that. So one thing I've been thinking about on the $1.25 billion acquisition is like, where did that come from? It certainly wasn't, collecting RAV and generating that size of value and then using that to make this acquisition. So had they already sold those tokens and it's cash and that's how the acquisition led? Was it a, all token deal from, okay, if so, are those treasury tokens? That's one thing I don't have any insight into that I'm very curious about. Because you could see a lot, like, I don't know, when GME had its crazy run up, they were selling equity into that run up because the stock was insanely overvalued. And now GME is like still alive, still kicking. They had cash, they survived as a business, and you can argue whether that's good or bad and who's the winner and who's the loser. But yeah, they're doing some more crypto things as well. But like, okay, let's hypothetically say that's what Ripple was doing. I don't know this, but again, where did the $1 billion come from is a fair question. Now they bought this business. They had this vision of bringing banking on chain. Maybe they were struggling with getting partners to do that. So they went out and acquired it and are going to do it themselves and have this proof of concept of, hey, this works. And you can see that this as our test case. Come join us on this mission. Yeah, I agree. I think it's the complete opposite way of like the fully maximum decentralization approach, where you're trying to build a neutral protocol. This looks a lot more like a business, but it's just an interesting thing to observe in the market.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. Mert, you had some thoughts on this L2 named Codex. It's like an optimism layer 2 that raised $16 million to build a blockchain that's only for stablecoins. And after I saw it, this thing came out, I kind of did some searching. And in the past, 3 to 6 months, there's been at least 3 others I could find that raised money specifically for, or at least launched layer 1s for stablecoins. There's One Money, something called Benfen, and then Ozean, which I haven't heard of any of these. But I don't know. Stablecoins are hot. Blockchain is hot. Why are you against stablecoins, blockchains for stablecoins?
I don't think I'm against blockchains for stablecoins on their own. I do think that the arguments they make so I'm open to there being new arguments is kind of my point with this. Like perhaps there's a good reason for doing this that I'm not aware of. I just think the arguments that they put forth don't make sense. So this other one, Codex, I believe, something like this. I read it. I read everything. I looked at their website. I couldn't find too many in their docs, so I went to their job postings where they actually go into much more depth. And so I read it for a while, and there's some silly thinking there in my view, and maybe it's silly thinking on my end. So I'm definitely willing to be wrong, but something like, they use the fact that Solana has outages and that Base gets transaction fee spikes as for like why this is necessary. And then I was like, if you have a decentralized system that's a database, that's a blockchain, you cannot control that, like, unless it's permissioned. Okay, like you need to say, like, you can't write in the code only allow this transaction if stablecoin. That's not how it works. That's not, you're not gonna be able to make that work. That's just not how these things are structured. So, so the alternative is then you're a permissioned blockchain. Okay, once you're a permissioned blockchain, you have basically lost, I don't want to say 100%, but roughly 99% of the value prop of being a blockchain. Like the word permissioned blockchain I'm not sure how much more evidence we need for this. It doesn't actually work. Like large banks have done this, smaller people have done this. It just doesn't. People like it's a very perfect mid-curve thing because it sounds okay until you realize like, okay, the left curve is like permission database is not blockchain. Like that's just not it. That's just a database. And so like if you look at their use case, well, because they want vertical integration, they want, well, we want to control the on ramps, the off ramps, we want some compliance tools, and we want to control like the sales cycle and all this. That all makes sense. That's great. You should definitely vertically integrate when you do that. However, there is no reason for a blockchain at that point. You just need a database and then like some API coordination layer, and then you can just settle to whatever blockchain anyways. Like that is completely like not needed. And people just estimate, I think, the amount of work it would require as a product team. And I look into the team's background, like as a product team to just build, maintain, monitor, and like, improve your blockchain. That's a lot of work. In fact, the smartest people on earth that are doing this are, let's say, at Solana, Sui, Ethereum. We still can't do it. But like, so it seems to me crazy that you think you can do that while also shipping these other products in an entirely different company. Like, it's just pure capitalism in my view, which is to say, let the specialists do what they're good at, and then you build on top of them. If you get traction, like super solid traction, such that you want to now, capture more revenue or something, okay, like maybe now it's time to get there. But if you do from day one, like what's going to happen? You're going to get like one hack, and then now your entire value prop is destroyed. So I think the entire concept itself is not stupid. I think it could make sense. I just don't know how yet, but I think it could work. Like I never want to rule anything out, but the way that is proposed, I think it's a bad design choice. I think it's the only way they can do the improvements that they propose is if it's permissioned, or if it's the best blockchain that's been created in existence. Probably not going to be the latter. So it's probably going to be permissioned. And I think Rob from Dragonfly, who I'm guessing led the deal, said something like, well, it doesn't have to be fully permissioned, it can be semi-permissioned. And it's like, that's kind of true, but like semi-permissioned on the app layer is like, you can just do it on an L1 or an L2 anyways, right? That's already how a protocol works if you control the update authority or the multi-sig keys and the database, which is what already happens today. So like, then I said something like, this would actually make more sense as an L3 on an L2 as opposed to its own L2 as a chain itself. Like you're just creating so many unnecessary problems for yourself that you have to manage the entire blockchain by doing this. Anyways, he's going to come to Dubai for token 2149. We'll have some drinks, discuss it, and maybe he'll change my mind on it.
Love that. Yeah, I think there's two interesting things here to add. One is I think we're seeing a broader trend around both of these. So the permission blockchain category, Athena announced their chain Converge not that long ago. Permission validator set, and I think they have a pretty interesting angle around it as far as the why. I agree with your points around the realities of the permission chain, but I think the why is kind of interesting, where they drive demand, a significant demand for assets through their structured product, USDE. And because of that, they can choose where those assets are issued. So they make up something around the neighborhood of like 65% of all of BlackRock's BUIDL fund. And they're like, okay, we're issuing this onto Ethereum, but if we had our own chain, we'd put it there, which I thought was pretty interesting. So that's why they're doing it. They do have an angle, they are the source of demand. Why forfeit that over to somebody else was sort of their business angle or their rhyme and reason of why they were interested in going that route. And the other one is stablecoin only chains. So it was Plasma that recently launched. I think they also are backed by Tether and wanted to be this like stablecoin transfer platform. I think they're trying to do free transactions as well based on a minimum balance requirement. So kind of trying to put that interesting angle in there, are really focused around Drive, it being a chain for stablecoin transfers to happen. So I don't know, you're seeing experimentation, and there's like multiple players cropping up right now in these spaces. That doesn't mean it's like the right answer, right? We've seen a lot of money flow into a lot of sectors that ended up kind of being misses over the past 3 to 6 years. So it's just interesting to watch that capital flow trend, but it doesn't necessarily mean it's the right trend.
The other thing I want to quickly add, and I don't know if this is that correct. I think in Athena's case, it makes sense because they started as a protocol. But if you do this directly as a blockchain, it's a bit like building a city and having all these great roads on it and saying we have the best roads, but then there's no people or businesses, right? Like to some extent, like this is at least how it works with on-ramps and off-ramps. It doesn't matter how good your off-ramps and on-ramps are if there's nothing worth on-ramping and off-ramping to, right? Like there needs to be something useful there for people to actually want to move stables there to some extent. Otherwise, it ends up being like these really weird B2B cases where it's like, you know, you're using Stellar to do some remittances or something, but that goes nowhere, historically speaking. So I think you want where the activity is first. Otherwise, you're starting on an island. And the only way to offset that is to have an extremely good B2B sales team, which is possible, but like it's unnecessary at start.
On this point of sort of going where the demand and activity is as well, something I've written about a couple times in the past few days is USDC and how like this revelation from Circle's S1 that 50%, I believe, of treasury revenue from USDC goes to Coinbase may shift the way that protocols think about stablecoins. So if you think about it, I'm pretty sure this is correct. You can fact check me, but I think we learned in Circle's S1 that 50% of the revenue that comes from the treasuries backing USDC's reserves goes to Coinbase, which is the operator of Base, which is a big competitor to Solana in terms of mindshare, I would say. Also, 77% of stablecoins on Solana are currently USDC, which means that the growth in demand for stablecoins on Solana due to the unique benefits that Solana offers for payments and meme coins and so forth, like directly benefits a competitor in some way. And so I'm wondering if as time goes by, I don't know who would do this at Solana or what this would exactly look like, but in the same way that Coinbase basically incentivizes USDC use by eliminating fees for USDC on Base, does Solana do something similar where it basically picks winners and losers and says, hey, this Solana aligned stablecoin that funds public goods on Solana or something has no fees to transfer? Because I do think that there's, especially with Coinbase's revenue share deal, there's something unsustainable with the current dominance of USDC in a lot of these protocols.
I think your thought process is right, but you're skipping a step. Like Circle pays Coinbase to is a rev share for driving demand to increase the supply of USDC. And then Coinbase sees, okay, I have this rev share. I'm going to do things to drive the demand or for a supply to increase the supply of USDC within my bubble. And that bubble is like on platform and Base. And so Circle kind of I would imagine that they'd go the other route and say, okay, we've got this deal with Coinbase. They're doing their thing. We love it. Now let's go see where else we can go. And I don't think they would go. I mean, maybe you do go to the chains. I think that's probably negative EV for chains too. At least the bigger ecosystems, like it would never make sense for Ethereum to do this. Probably not Solana. Even like Arbitrum has that deal with, I don't think it's a deal, but USDT is building they're using Arbitrum in like a key point of infrastructure for their cross-chain transfers with USDT 0. So maybe that's not a great home either. But instead of going to the chains, I think an interesting opportunity is going to the apps that drive the demand, right? And any like lending protocols are huge sources of demand for stablecoins because there's demand for leverage and you borrow in stablecoins. So I think it like skips the chain and goes to the app layer would be my prediction. But yeah, I think you're directionally correct. And like USDC needs to compete with Tether. That's what they get benchmarked to. And to your point about their S1 reveal, we know that they pay a lot of money to have it basically has incentives to grow their market share. So it's nothing new. It's just interesting to think about. Whereas it's unclear that is happening with Tether, right? They have these massive numbers, very small employee counts. And it seems like most of that's hitting the bottom line, but we have less visibility into those financials as well.
Yeah, I mean, I'm looking here at the Blockworks research chart, right? Like when the Trump coin released and was paired with USDC, prior to that, there were around 4.5 billion USDC on Solana. Today, there's closer to 9.5 billion. So that's 5 billion in new USDC minted on Solana, and a lot of that benefit goes to a competitor. So I do agree with your point, Dan, that perhaps the apps begin to do some kind of rev share deal, and it feels a little icky maybe for like cypherpunk ideals for blockchains to kind of pick winners and losers. But at the point at which USDC is directly benefiting Coinbase and Coinbase operates, someone who's trying to compete for a lot of the same developers and users that you are, I don't know. I'd be surprised if Solana isn't thinking about something along these lines.
That also confirms my earlier point, by the way, around like the stable coins doubled after there was activity on chain already, right? So like doing that on its own is going to be just much more difficult, although it's possible. I don't think Solana itself would do this thing, by the way, for stables. But yeah, I think like roughly speaking, probably something like the closest you can see today is like PayPal, PYUSD, like incentivizing the Camino pools, like, and that's directly with the app. Probably something like that makes the most sense, and probably what Solana Foundation would refer them to. Just guessing, I have no idea.
Well, yeah, there's this new Paxos Anchorage stablecoin. Is it GUSD? I want to say that has some Camino incentives that are related to Jito as well, I believe. So there, yeah, maybe it looks less like disincentivizing USDC versus creating, reason for people to borrow against some new stablecoin or something like that. It's been a good episode. It's been a fun roundup. I feel like it's been a little bit of time since we've done one of these. If you want to hear more content from both Mert, Dan, and also myself, I guess, come out to Permissionless 4 in June. It's in Brooklyn. It's for builders. It's going to be sick. Good debates, good content, good conversations, all that stuff. Tickets are available now. We'll link those in the show notes. Please like, subscribe, 5-star, retweet, wherever you're watching this. If you enjoyed the episode, share it with a friend, and we will see you all once again very soon.